Hello, my dear friends. This is your friend Vivek Bajaj, co-founder StockEdge and Elearnmarkets. Friends, this is the most exciting face-to-face I probably would have recorded ever. I'm going to record this one with my inspiration, someone whom I have looked in since my younger days, although I still look younger, but still younger and younger days. And he has been a great inspiration for at least my generation who have started well in market as a full-time market professionals. Let me, before I welcome him, let me give you a brief background about him. I'm talking about none other than Jack Schwager. Jack Schwager, we all know he is literally a household name, at least globally. People who are at all related to stock market or financial market would have known him because of the lovely content, books, literature he has given to us. And obviously, Jack, being a market participant, has added tremendous value to that whole discussion journey. So he has been a industry veteran. He's an expert in futures, and he has run hedge funds. And he was the founder of Fund Seeder, which is essentially a platform which democratizes the trading access to budding traders. Pretty similar to what we are doing here in India through Credit. So he was a partner in the Fortune Group from 2001 to 2010. It's a London-based hedge fund advisory firm. His prior experience also includes 22 years as directors of futures research for some of the Wall Street's leading firms. Most recently, Prudential Securities. Well, I can go on and go on. He is amazing. We all have read his books, and I'm sure that this interaction with Jack is going to take all of us to the next level of our stock market trajectory. Now, let me welcome Jack here. Jack, how are you doing?
I'm doing fine, thank you.
It's absolutely pleasure to have you, and I'm so excited to record. At the same time, I'm very nervous to record this one.
Oh, you should relax.
Thank you. Your smile is making my life so easy. So thank you so much for this lovely smile.
Sure.
So, Jack, I have an opportunity to interact with you, and we can talk about anything because you have been there, done that so much. So, I don't want to waste this opportunity talking about a specific strategy or a specific thing. I think to get a lot of wisdom from you is something which I would aspire in this interaction. So, are you ready? Are you ready to give a lot of
I'm
things
ready.
to me?
Fire away.
Thank you. Well, Jack, I run a series here called Face to Face in India. I've recorded 130 interviews with same undiscovered trading talents in India. And we had over 40 million views in YouTube channel. And people simply love me. And when they ask me that, who was your inspiration? Why did you start this? And I always say that there are two people who inspire me. One is Jack, because what he did in US, I'm pretty much copying what he did there. And the other person is one of my investors, my mentor in India called Ramesh Damani. He recorded something like this for big guys in India called Dalal Wizards of Dalal Street. So I thought that if people are covering big people, why don't I cover hidden talent in India and bring them forefront? So I'm very happy. Some people do call me Jack Schwager of India. That's the most flattering thing I can expect. Okay, thank you. So let me
Sure.
start. Sorry. So let me start with my questions. I have made some queries for you. So let me start with that. As I said, that you have been there, done that. What do you think differentiates you from others? Why you were able to be so successful in literally all the endeavors which you have taken? You have that Midas touch.
Well, I would clarify what we mean by success, or in successful in what. I don't consider myself a great trader. I always make that clear. I write about market wizards. I'm not a market wizard. I make money in the markets, but that's not my main endeavor. It's not my talent. So I think I've been successful because I found something that I was good at, which was basically writing, and not just only writing, but particularly being able to take complex things or esoteric things and put them and explain them in a way that layman can get it. So I mean, everybody has some sort of talent. I think I'm good at that. I'm good at taking things and explaining them. And I think that's why the books, I'm trying to answer the questions for myself, and in doing that, I'm translating it for the audience. And since I have the same interest in what makes traders successful, what do they do right, what have they done wrong, it's things like that. So in trying to educate myself on that, I'm good at relaying that to other people. So I think one of the keys to success, I mean, people say, follow your passion. Well, that's always good, but it doesn't always work. You also have to be in something that you have a skill for. So I was lucky to have, I didn't plan to be a writer. I was just lucky to find myself, find that path a bit through luck, a bit through success, but that's the key, is just finding something that you're good at. And for some people, it might be trading. For some people, it will be something else,
True, true. So, Jack, when you started early, writing is something which came to you later, right? When you started, you wanted to become a trader, right?
Yeah, no, I started out really as a researcher. I mean, my background was economics. I was kind of analytically oriented. So I was just looking for an analytical job. I knew nothing about markets. I just fell into my first job by just putting an ad in the paper and getting an interview. And then basically I got the job. Actually, ironically, I got the job by writing, because the research director at the time was writing a column for Barron's, and he had all the potential candidates write a sample column. So, I spent a week doing research, and I was assigned the copper market, and I wrote a piece on copper, and which ended up being pretty good, but it was good enough to get me the job, essentially. So I also in college I wrote some, a bit, and but I didn't realize I had any particular talent for it. Just something I did. And eventually I wrote a first book, which was an analytical book, and that eventually led to the Market Wizard series.
Okay. So, there are so many youngsters who are joining the market bandwagon in last 2 years, thanks to COVID and work from home and trade from home. And, I get queries that what should be the right path? Should I start with investing? Should I start with trading? Should I start with analysis? Do you think starting as an analytic person and then graduating to looking at the market from a different perspective, does that help you to get a better grip of the market?
Well, it's a good way in the sense that basically any trading approach you do has to begin with some analysis. You just don't. It's not something that you read a book or watch a video and do. You have to kind of do your own analysis and figure out a methodology. And so, no matter what your approach is, whether it's fundamental or technical or whatever, at the bottom, there's analysis of some sort, right? So being an analyst is actually helpful in that sense, that it gives you, your job actually allows you to prepare. So that's one way. But a lot of people, of course, aren't analysts and don't have that opportunity. And then it's a matter of doing it as a hobby almost in the spare time. And you still have to go through the same process.
Right. So, when it comes to analysis, people believe that looking at the stock price all the time and looking at the graph is analysis. Do you think that is analysis, or
no,
how do you define?
That's not analysis. Now, if it's a subset, it could be a subset. If you end up on technical analysis and you end up in a subset of chart-oriented analysis, and you end up in a subset of that of short-term charts, maybe then, looking at the market all the time, charts. I mean, for some people do it that way, and that's one way of, thousands or tens of thousands. It's not, but it doesn't apply to a lot of people. And for many people, watching the market too much is actually counterproductive. I'm reminded of Ed Seykota when I asked him, how come he didn't have a quote machine on his desk? He said, and I'm paraphrasing here, he said, a quote machine is like a slot machine. You end up feeding it quarters all day, meaning that if you watch it too closely, you'll just trade too much and really mess things up and lose money. So for a lot of approaches, it's counterproductive. It really, like I say, there's the exception that I mentioned, but for many approaches, that's not the way. Success is not watching the market continuously.
Sure. Sure. So now that you talked about chart, I would like to just pitch in with this question that, say, if someone wants to start, what should be the duration of the chart? If someone wants to do technical, say, for example, what should be the duration of the chart should one start with? A 5-minute duration, 15 minutes, 1 hour, or it should always be weekly chart to start with?
The first, technical and fundamental is one division. And within technical charts and, systematic or indicators or whatever. But even with charts, as you mentioned, time is another division. But you can have all these different parameters where, until you define what a specific methodology is. And the time is, again, and all of these are dependent upon the individual, because some people are comfortable trading very long term, and that works for them. And some people are very impatient and they want to trade short term, and they can do it, but not everybody can do it. It's much more difficult. So it's only if it fits, only the methodology you develop is short term, does that work? And you have to really define for yourself. It's like saying, what size suit should people get? Well, it depends. I mean, some have small sizes, some are larger, some are fatter, some thinner. You can't say which size is right. So to say which time frame is right is the same thing. It's going to be right for some people, but wrong for others. And you can also combine things in terms of going from, looking at multi-year charts down to daily charts, down to intraday, and and some people will combine them and try to get them all to be consistent and with each other. And that, again, is another approach. So it really depends on your approach. There is no right answer on that. Right. People who are successful, I've interviewed people who are successful trading very, very long-term, years. And I've interviewed people who are successful trading, a few minutes at a time. So it really is dependent on the person.
Sure. You talked about framework, and finally, everyone has to find out his or her own space, her own framework. But and I know there's no right answer to this question, but I still want to fancy my chance.
Sure.
What should be the minimum time people should expect that by this time my framework will be more or less ready? Because obviously it can't be day one, right? It will take some time.
No, it certainly isn't. And I think I asked in my latest book, Unknown Market Wizards, I think I asked that question that came up with, I think, the Peter Brandt interview. And I think he said his experience, and he's had experience with knowing a lot of traders, he says it usually takes at least 3 to 5 years. I mean, that's a reasonable assumption, but that doesn't mean necessarily that in 3 to 5 years you've got to figure it out. You may start out with one methodology and then end up changing it, and that's probably more common than finding one methodology and just staying with it forever. So you have to. Markets will change, and things that work will stop working, and so it may take you, a reasonable assumption, maybe 3 to 5 years till you get a workable methodology, but that doesn't mean it's going to be permanent.
Sure. Jack, I want to talk to you about one scare which is there in India's traders' mind these days is algo trading. We always, India always looks at how US market has evolved, and we know that systematic rule-based algo trading is quite big in US. If I'm not wrong, it contributes almost 80% of the exchange liquidity, whereas in India, it is picking up quite fast in the last 5 to 6 years. In fact, machine learning, AI, everything has come into Indian market as well, and we are finding it difficult to compete with robots, which is quite obvious. So one insecurity which Indian traders has, that is this the right future? Am I into a right career? Because if robots are going to replace me, then it is going to be a tough thing for me. So could you give us a perspective that how it evolved in US, and probably the same thing could eventually happen in India as well? And whether a discretionary trader will be able to survive in any kind of market scenario?
Yeah, well, certainly, we've had one of the big changes when I started out in the early 70s, from then to now. One of the dramatic changes has been, computerization. I mean, when I started out, we didn't have PCs. I remember, the year before a year or two before I started my first job, to run to do anything, you had to, I remember being on an IBM 360, which was a room-sized computer that had the power, it had a fraction of the power probably of what a PC has nowadays. So, we've come a very, very long way. PCs then come on until, common use until maybe, the early 80s probably. And then, then we had computers getting much more processing speed and supercomputers. So nowadays you do have that situation where you have some firms that have literally 100 quants with supercomputers, and so that's kind of a little bit intimidating. But and then there's artificial intelligence, which is its own thing, which is more a matter of computers learning, how to learning from their experience, so to speak, how to improve the program itself. So that all's intimidating, and there are some successful players in that field. But a couple of things on that. First of all, let me just mention that when I went in to write this last book, I kind of thought, gee, I'm not going to find traders who will perform anything like the traders in my first book. Because back that was in the 70s, that was before computing and and all that. And you had some exceptional traders, but I thought nowadays with all this computerization and all these quants, there wouldn't be that much of an edge. And ironically, some of the track records I uncovered, and remember when I'm interviewing people, I'm looking for people who have traded for 10 years more, 10, 20. So it's not just a fly, it's not just a couple of lucky years. And quite a number of the traders in this book are probably as good, if not better, than anybody I've ever interviewed. So apparently there are people out there that for long-term periods have been exceedingly successful. And they're all, I should say, they're all discretionary in this last book with the exception of one trader. So apparently, just by empirical evidence, and of course I've only found, a dozen traders or interviewed, that's not I didn't go through the universe of traders, right? There's lots of traders I don't know about that have been, successful. So apparently, just from empirical observation, it is still possible, despite all this computerization and all this competition from quants, it's still possible for the discretionary trader, the solo guy. And these people I interviewed were basically solo traders, just one guy with a computer. It's like, and they weren't necessarily quants either. Some a little bit analytical, but generally not. So yes, so the answer empirically is yes, it's still possible. And the other thing I would say is to kind of contrast how markets are different. So a classic example is chess. So chess has a tremendous amount of combinations, and for there was a time where people thought, well, computers will never beat a master. So many years ago, we've passed a point where the best chess master of the day, like Magnus now or Kasparov in his day, or cannot even come close to competing with the with the AI computer, and just how sobering that could be in chat. Just to give me an example is it's not just that but also the computers will come up with these types of games that people just will never even imagine, so the difference though with markets is that the markets are just astronomically more complex than chess. Why? Well, the big reason is, you have a lot more variables, okay? That's not the main one, but that's a big one. You have a lot more variables. So you think of all the countries involved, all the people involved with psychology, all the economic factors, on and on and on. It's just tremendous. If you just think of economics, you can think of 100 economic factors that might influence a market at one time or another, plus each market influencing the other market and so on. So there's a lot more variables. That's one thing. But the real kicker is in something like chess, the rules are defined. The knight is going to move two spaces in one space. The knight is never going to move diagonally, right? So it doesn't change the way it moves. And in the markets, that's not the case. The markets are really tough because some take equities and bonds. Sometimes they move together. Sometimes they move opposite. Sometimes they move completely independently. And so it's like the rules are always changing in how these different variables work, behave, and how they interact with each other. So that makes it just an exceedingly complex problem. So plus the psychology factor that's involved. So will it ever be decided? I would never say never, but apparently, despite all the computerization we have and the tremendous progress we've had in a lot of scientific fields and in what computers have been able to achieve, I think in trading we're still in a world where the individual trader can prosper if they have the talent.
Awesome. This gives a lot of comfort. I'm sure people who are getting into it will get that comfort. In fact, that's the beauty of market, that 1+1 can be 2 as well as can be 11, could be 1 as well. So we can't. So Jack, tell me, you have interviewed so many people. Do you believe traders' gut, which is that, final decision-making point when the trader says that, let's do it? So do you think trader gut is actually a science?
I mean, does gut feeling have a work or whatever? Is that the essence of what you're getting at?
Yes.
Yeah. So sometimes, yes. And it's a matter. That's one type of talent. People have different talents in trading. Okay. Great traders are not all successful for the same reason, or for the same innate skills. So, for example, somebody I think of somebody like Michael Marcus, who was the first chapter in the first Market Wizards book. So I knew him well, and he was very, so he's somebody actually. I took his job, by the way. My first job, he was leaving. That's why there was a vacancy. And so I met him when I was coming in. He was clearing his desk out, and for a few years he was still in New York. And we used to get together for lunch and stuff. Anyway, so I knew him, and I knew that he was very intuitive. So there could be 100 factors. I remember the cotton market, the classic year, which was the first year, which is back in the early 70s. And this was the first time that, cotton had the historic bull market. It went to actually almost $1.99. And that was, it hadn't been like that since the Civil War. Mm-hmm. So it was really an unusual market. Now, I was an economist and just did all this. And, I studied every cotton year. I decided most of the years were really controlled by government programs and you couldn't use them. And I ended up there were only about 3 or 4 market years where the market really operated freely. And based upon that, there was one year that was very bullish, and had a similar tight supply. And back in that year, the market went to 35 cents. I thought, we can go up to the mid 30s. This is when it was in the mid 20s. Now, the market did go up there. But at that point, I thought, well, that's pretty much is getting extended. Marcus, though, and I looked at all these factors. I did this regression analysis, whatever. And Marcus didn't do any of that. But he kind of, could look at all the factors influencing the market. And he realized, because the PRC, which was China, what China was called then, that was the first time they were coming into the market. And he realized that trumped everything. And that was going to drive the market. It was going to go to historic highs. And ultimately went almost, like I said, almost to $1. So he had this intuition, he just was able, he would be able to pick out the factor that the market would pick on. He just had this intuitive sense. So yes, for some people, it's not just pure gut feel. There's a reason, but their instincts are very good.
So, how do we develop that? Because that I think differentiates a man from a boy, right?
Well, part of it's experience, experience of what works and particularly what doesn't work. So, I'll give you an example. If I happen to look at short-term charts, sometimes I'm in a position and But I haven't planned to get out. Let's say, I mean, normally I'll have a stop. But let's say it's not near my stop, but I see the market's like having a very sharp rally. Let's say I'm short, and I think, and I just almost have this instant, feeling of I should cover. Usually if it's just like at that moment, just like an emotional reaction, it's usually the wrong thing, because I'm just behaving just like other people behave with a certain panic, and that's usually when the market will turn. So in other words, it's stuff like that. It's like catchy, just from your own experience, to know that, hey, when that happens, you don't want to, or if you're like, you haven't been in the market and you're afraid it's going to run away, and then, just that moment where you finally, instead of waiting for your point to come, the market to come back to your point, you say, I better get in before I miss it. A lot of times that'll be just a point where the market turns back down again. So in my case, I've learned that, you don't want to go with that type of emotion. You want to beware. You don't want to act on that. So part of this gut feel is just learning. And then ironically, like an example I gave you, it's actually counter to what your instinct is, right? Mm-hmm. But that's part of it. It's learning when your instinct is wrong, because your instinct is the same instinct of a lot of people who will do the wrong thing.
Sure. Jack, you know a bit about Indian market. I mean, we have seen you in Indian platforms as well at times. And just to give you a perspective, that right now Indian market is largely dominated by options trading, because the cost of transaction in options is low. Cash market or the delivery based market is relatively smaller, and futures market is just between the cash market and the options market. So a lot of retail investors or traders particularly, they come into the market and start trading options from day one, because they believe that the capital requirement is less there, and it's far easier. It's perceived to be far easier to make money in options than trading in futures or cash market. So my question to you is that, what should be an ideal journey for any typical retail trader with a small capital? Should he or she start with options or derivative overall, or let's start with cash market, warm up, take some time, and then start getting into with a small capital in derivatives?
Yeah, well, options markets are different. So it's it's again a methodology. So trading options, it's its own type of thing. Now you can combine options with outright trades. So for example, let's say you're a perfect example here. Let's say you're long and the market has gone up, and you want to take profits, and you feel pretty strong still that, well, the market's going to you think it's up to resistance, you think it might stall, you don't expect it to come way down again, but you don't want to, you're worried about that, maybe you should take profits. Well, one thing you can do is you could, instead of taking profits, you can sell a call, and then you get a few extra, and then if the market does go higher, your exit point effectively ends up being better than you would have just got out. That's an example where, or even better example is, let's say I want to buy a market at $20, just to make up a number. And right now it's at 22, and the option, I can sell a put for $2. So that isn't, again, combining, that's combining the outright. So the beauty of that is, okay, so if the market doesn't come down to my buy point, then normally I would just miss it. But here, if it doesn't come down to my buy point, at least I pick up the premium on having sold the $2 put. And if it does go down, and if it, and let's say it goes down to 21, it never goes, again, I end up effectively getting the market at 20 where it never traded.
Sure.
And if it does go down to 20 or under, well, okay, so my option is a loss, but I end up buying it where I would have anyway. So there's a way of combining options and outright in a way that it adds, you can, by using both, you can do better things, so to speak. It's more optimal. You can find better optimal solutions. Now, just trading options on its own it's a separate thing. So it has to be part of the methodology. You have to understand, you have unlike markets, if you're long, you have to deal with time decay. And so you could be right in the market, but the option can expire worthless before, and you'll lose money, even if you ultimately, even if you could buy a call and the market maybe never goes down, but you can still end up losing money if it doesn't go, it doesn't cover the premium in time. So there's all sorts of, so the thing in options is very important to get the timing right, because otherwise the time decay will kill you. And there are things like, I'll just throw out personally my own belief, and it does come out, this is in some of the books, and there's an option, there's an interview with Jamie May in Hedge Fund Market Wizards, which goes into a lot of detail about option trading, but in a way that's not your option books. And one of he makes a number of points of how the option theory is really inefficient in terms of reflecting how the market really behaves, because it doesn't allow for trends, as one example. So the option pricing always assumes there's an equal probability of up or down at any point in time. It doesn't allow for the effect of a trend. Now, what that means is that distant options can be, much better priced than short-term options, because the market isn't pricing in the fact that you can have a trend. And on the other hand, the opposite side, short-term options decay so quickly that it's my opinion is, if you're selling options, I always would say you sell the shortest duration, sell really short duration, because you'll get the time decay really work in your favor. And if you're buying options, go out as far as you can, but you'll get a better value. So that's a generality. It's not true in every situation, but
sure,
those are some examples of the nuances of options. And again, it's different than just outright. So I think it has to be part of your methodology. You have to understand what you're doing.
Sure. So yeah, I understand this is slightly more complex, because one can use it properly. It's a double-edged sword. If not used it properly, then obviously it can lead to constant losses as well. So my question again is that if someone is starting,
So yes, somebody starting, it really depends. Again, you don't start trading, or you shouldn't start trading until you have a methodology.
Okay.
And that will depend. So, for some people, the methodology might be options. For some people, it'll be stocks. For some people, it'll be futures. For some people, it'll be FX. So, that's one of the things that you have to define, is which market are you trading? Okay. Which market have you developed a methodology for? So again, that's going to differ for everybody. There is no right answer to that.
Sure.
It's where your interests are and what feels comfortable, and where you've developed a methodology.
Sure. Point taken. So, Jack, this question is going to be a long one, and your answer is going to be longer as well. There are. So you have interviewed so many people. If I have to derive the summary out of you, 3 common traits you have observed with successful traders, that these are the 3 things which typically people have to become successful in trading. And if you can share some case studies also with us.
Yeah, the most common, most important ones. I mean, like my books are really all about the common traits. So if you go for, and in fact, in the books, I usually have a summary chapter. And in some of the books, like this last one, I think there's some 40 plus things I pick out. But that's the 3 core ones. First is risk management, and the understanding that risk management is more important than the methodology even, and all good traders will tell you that. So a respect for risk management and a really rigorous adherence to risk management is one essential item. The second thing is, I would say, is discipline. Good traders just tend to be very disciplined. They have a method, they have rules, they will stick to what they do. If they don't, it's an occasional mistake, but they work to get to a point where they don't make mistakes. That doesn't mean they're not going to lose money. They could be wrong on markets. Their methodology is not going to work at times, but they won't lose money because they've deviated from what their approach is. So rigorous discipline, and it's probably no accident that I don't know if it's like 3 or 4 or maybe even 5 people I've interviewed in the course of the Market Wizards books were ex-Marines. So I don't think, there's certainly one in this most recent book, and there were I can think of 2 others at least from previous books. So it's no accident that I think that ex-Marines have a kind of built-in advantage to be traders because they've learned discipline very rigorously. And the third one I would say is flexibility, is the ability to change your mind, the ability to admit you're wrong, the ability not only to admit you're wrong, but the ability to, if you think you're wrong, to actually be able to completely reverse your position. I call it no loyalty to your position. And so that is really a critical trait. That's why I think people who are very dogmatic would make lousy traders, because you have to be able to admit you're wrong. You have to be open-minded. You have to be able to react very quickly and say, no, I'm not going to hope I was wrong, I'm out, or I was wrong and I'm going the other way, so.
Sure. Great. These 3 are fantastic pointers. So, guys, whoever is listening to these 3, please write down and keep it as a printout in front of your screen, because these 3 are the most critical ones. Jack, just one small question from a lifestyle perspective. So I have seen that traders typically have more flamboyant lifestyle. They like to enjoy a lot of luxuries. And investors, I have seen, they try to live a very simple life. So do you believe in this phase which I'm saying, or it's a misonym?
No, I don't agree. First of all, I don't agree with it, because there are traders who are flamboyant, and there are lots of traders, people I've interviewed, some of them may be a bit like that, but a lot of them, are kind of, very unassuming, So even if they made fortunes, you wouldn't know it, based on the life they live. So I don't think that's true as a generalization. And on investors, same thing. I think you have investors who will be flamboyant and those who won't. So I don't think that's a distinction between traders and investors. And I don't think it has anything to do with success in either endeavor. It's just some people are oriented to be that way, and some people, they may have the money, but they don't use it in that way.
Sure. All right. You have again interviewed so many people, and I'm sure you're great friends with them. So you talk about all kind of things. Tell me, in India, Indian society has never accepted trading as a full-time occupation. I still remember my father, he's from market for many years, and he never encouraged me to get into market because Indian society is tabooed that if you can't do anything, you do trading. So what's the role of a family for all these successful traders? I'm sure that the families have been very supportive to them to become such names.
That's never actually come up. Family, I think traders basically just gravitate to it because that's what they wanted to do, and that's where they found they were. Usually, it's a matter of that's just what they either got into by accident and found they really liked it and were successful, or they always wanted to do it. A lot of the great traders their interest came in high school, even, they started trading in high school. So for a lot of people, it's just something that the successful ones that they wanted to do. Family doesn't, one way or the other, was not an influence either in an encouragement or discouragement. It never came up really. Maybe it's a different societal difference. I don't know. But it's not a factor that I
Sure.
came up with.
Sure. I mean, in India, we in a social structure in India, we have that influence of family in our decision making. So a lot of people do ask me this question that, so my father is not allowing me trade, what to do? And then I have to talk to his father and tell him that it's not bad to be a trader. I mean, there are doctors, there are lawyers. Why can't your son become a trader? So that's probably the structure of the society we are living in.
Right.
Jack, if I have to kind of, because I have limitation of time with you, so
Sure.
and it's late out there, so I'll just try to ask you last 2-3 questions.
Appreciate that.
What's the core education because there is no qualification to become a trader. It's more of an experiential profession. The more you do it, the better you become. But if suppose someone has to start thinking about becoming a trader, what's the basic qualification required? Not in terms of certification, but in terms of kickstarting the journey of learning being a trader.
Yeah, well, I think the first thing anybody should do is read. You can search on you can search online, look at reviews, try to pick out different books, different aspects of trading. And the point is, when you start out, you really don't know. You would have no idea what. I mean, I started out as a fundamental analyst and ended up as purely as a technical analyst. So you just really don't know what will be right or what will work for you. So I think you just have to kind of expose yourself to different approaches and get a feeling for what seems right, what makes sense. And then you have to start trying to apply things that don't take books too literally. You're looking at them for ideas. I mean, when I'm saying that, I mean, it's like some of the stuff in the Market Wizard books, I think those are basic principles like money management we talked about, et cetera. Those are things, yeah, those you should definitely adhere to. But I think if you read a book and they tell you, well, you do when the moving average does this and this oscillator does this, you do that, and they show you this nice example of how it works beautifully. Keep in mind those examples are almost invariably well chosen. So you're going to find that when you actually try to go to markets and do that, it's not going to work a lot of times, more than you think it's not going to work. So you really have to develop your own methodology, but you can read books for ideas and what feels like it's, I want to try this. And then you may adapt ideas, you may get something and change it. And you just experiment with different things to see what seems to work, what doesn't. And at some point, let's say you've developed a methodology and you've developed trading rules. At that point, then you can start trading. But I would say do paper trading first. And now you can open brokerage accounts, which let you to trade virtually so you can see. Because if you can't make money trading without real money, you're not going to make money trading real money, because then it gets much more difficult and your emotions get in the way. So first you have to establish that your methodology can work if your emotions are in check, and that virtual trading is the way to do that. And if that goes well, then start with a small amount of money, and then you can start trading. So it's a process. The mistake a lot of people do is they think they can read a book over the weekend and go in and trade against the professionals Monday morning, and that doesn't work. And that's why most people end up losing.
Sure. I know one institution which does provide awesome base building. The institution is called jackschwager.com. So I would recommend everyone to just go to that website. All the books which Jack has written, it's already there listed. His latest book was released in 2020. So one has to read all those literatures which he's giving to us to set the foundation, set the undertone of becoming a trader. Jack, this is going to be my last question.
Sure.
I always push people to think of becoming a multi-asset trader, because finally real money is being made by someone who is tracking all asset classes and trading in multiple opportunities offered by these asset classes. So do you think, it's not easy to reach there, because people always start with a very micro view, micro actions, and multi-asset is a very macro, almost a 10,000 feet view about the market and taking big positions. So do you think that should be the final target of everyone, to become a multi-asset trader?
Oh, not for everyone. I think that's one approach. The advantage is that you have more opportunities, but you also have to spread yourself thinner and cover a lot more. So if it's part of a person's methodology, fine. And so, for example, myself, I'll trade futures and stocks, but it's nothing wrong with trading just one or the other. It depends on what your methodology is. If you can, trading more than one asset class is probably good. Actually, if you're trading futures, you are effectively trading different asset classes other than individual stocks. But so I think it's fine if that's your methodology, but it's not necessary. You can just probably more traders focus on just one market rather than all markets.
Sure. Fantastic. So I got all my major pointers cleared. And
Good.
obviously, I don't want to end this ever, but I know you have given me limited time. So I'm very, very excited, thrilled for whatever time I was able to spend with you and get a lot of wisdoms from you. Jack, great. Thank you so much for giving your time.
Sure, you're very welcome.
It was exciting. It was very exciting.
Thank
you so much.
Thanks.
And I'm going to also send you the link after I release it.
Okay. All right.
Thanks a lot. Thanks a lot.
Have a good day. Bye.
Thank you. You too. Have a good night. Bye-bye.